If you worked overtime in 2025, you might qualify for a tax deduction worth thousands of dollars. Yeah! But your employer isn't required to tell you about it. And if you don't know what to look for, you're gonna miss out on it completely.
Oh, no.
I'm JV Charles. I've spent 30 years in the skilled trades industry, from union carpenter to project manager to UAW inspector, and I've worked thousands of hours of overtime in my career. And today, I'm breaking down the overtime tax deduction that just passed, who qualifies, and exactly what you need to do to claim it this year. Because if you don't get this right, you're leaving money on the table. Welcome back to JV Charles TV, where I give you real information that actually affects your paycheck, especially for blue-collar workers. I want to remind you, I am not an accountant, and I suggest you talk with a pro to verify the information I have for you. That being said, I've done a lot of research and I have a pretty good insight on no tax on overtime. So let's get into it, fellas. So here's what just happened. In July 2025, Congress passed something called the Big Beautiful Bill Act. And buried in that bill is a tax deduction on overtime pay. Not all overtime pay, just the premium you get paid for working overtime. Now, this matters a lot for skilled trade workers because we work overtime. HVAC techs during summer heat waves, electricians on commercial jobs with tight deadlines, and plumbers on emergency calls. Overtime is how a lot of tradespeople push their income from $70,000 to $90,000 or even more every year. And now there's a tax break on it, but only if you know how to claim it. And today, I'm walking you through who qualifies, how much you can deduct, and the steps you must take to actually get this deduction, because your payroll department isn't going to do this for you. Hit subscribe if you want real information on maximizing your income in the skilled trades. So let's break it down. First, let's talk about who actually qualifies for this overtime tax deduction. Requirement number 1, time frame. This deduction is only available for tax years 2025 through 2028. It's temporary. They could extend it or make it permanent, but right now it's only good for 4 years. So if you worked overtime in 2025, you can claim it on your 2025 tax return that you file in 2026. Requirement number 2, filing status. You must file as single, married filing jointly, or head of household. If you file as married filing separately, you do not qualify. So if that's your filing status, this deduction isn't available to you. Requirement number 3, income limits. This is the big one. Your modified adjusted gross income has to be below certain thresholds. Single filers, your modified AGI must be less than $150,000. Married filing jointly, modified AGI must be less than $300,000. If you make more than these amounts, the deduction starts to phase out. And if you make substantially more, it goes away completely. So what does this mean for skilled trades? Let's be real, most journeyman level of tradespeople are under these thresholds. A journeyman electrician making $80,000 a year, you qualify. An HVAC tech making $95,000 with overtime, you qualify. And a plumber making $110,000, you're still under the single filer threshold. Even if you're married and your spouse works, as long as your combined income is under $300,000, you're good. So for most skilled trade workers, you're going to qualify. The question is how much you can deduct and how to actually claim it. Now let's talk about how much you can actually deduct. The maximum deduction amounts. Single filers, up to $12,500. Married filing jointly, up to $25,000. That's the maximum. Most people won't hit that cap, but it's there. And here's the critical part. You don't get to deduct all of your overtime pay. You only deduct the premium portion. And let me explain with a real example because this trips people up. Hey guys, it's JV. Let me pause the video real quick. If you want a faster way into real careers that pay, check out Course Careers. They train people for in-demand jobs in tech, business, and all sorts of construction trades without wasting years in college. They're rated almost 5 stars with thousands of real reviews you can check out. You earn a certificate of completion and they help you prepare for real job placement. And if you use my link, you get $50 off instantly. So if you're serious about changing your income path, the link is below. Here's an overtime calculation example. Let's say you're an electrician making $30 an hour, standard 40-hour week. You work a 50-hour week, 40 hours regular, then 10 hours overtime. Your overtime rate is time and a half. So you get paid $45 an hour for those overtime hours. That 10 hours at $45 an hour equals $450 in overtime pay. But here's the thing, you don't get to deduct the full $450. You only deduct the premium, the extra $15 per hour that's above your normal rate. So your deduction for that week is 10 times $15 equals $150. And why does this matter? Over the course of the year, if you work consistent overtime, that premium portion adds up. Let's say you average 5 hours of overtime per week the whole year. That's about 260 hours of overtime annually. At $15 per hour premium, that's $3,900 in deductible overtime premium. And that's well under the $12,500 cap for single filers. So you get to deduct the full amount. For an HVAC tech or plumber who works heavy overtime during busy seasons, you could easily hit $5,000 to $8,000 in deductible overtime premium. That's real money coming off your taxable income. Now here's where this gets tricky, and this is what most people are going to mess up. Unfortunately, your W-2 doesn't show overtime separately. When you get your W-2 for 2025, it's going to show your total wages, let's say $85,000, but it's not required to break out how much of that $85,000 came from regular pay versus your overtime premium. Some employers might put in a box 14 of the W-2, which is an informational section, but they're not required to do it. So what does this mean? If you just look at your W-2, you might have no idea how much overtime premium you're eligible to deduct. And if you don't know, you can't claim it, and you leave money on the table. But here's the solution. You need to get your final pay stub from 2025. Not just your W-2, your actual last pay stub of the year that shows the breakdown of all your pay. Most pay stubs separate regular hours, overtime hours, and the rates you were paid. So here's a step-by-step. Number 1, get your W-2 like normal. Number 2, get your final pay stub from 2025 that shows your year-to-date totals. Number 3, look at a total overtime hours worked. And number 4, calculate the premium portion, the extra half-time or double time you were paid. And number 5, that's your deductible amount. And here's the good news. This is only a problem for 2025 because starting in 2026, employers will be required to split out your overtime premium right there on your W-2. So this year is the only year you have to jump through this extra hoop. But if you don't do it, you're going to miss the deduction. Your tax software won't know, your accountant won't know unless you tell them. So this year it's on you to track it. Alright, so you got your W-2, you got your final pay stub, and you know how much overtime premium you earned. Now what? The new IRS form Schedule 1A. The IRS created a brand new form to handle all the new deductions from the Big Beautiful Bill Act. It's called a Schedule 1A. This form covers the overtime pay deduction, the no tax on tips deduction, the Social Security deduction for people 65 and older, and the car loan interest deduction. All these deductions get added up on Schedule 1A, and then that total flows back to your main 1040 tax return as an additional deduction. And here, guys, is how to use it. If you're filing with tax software like TurboTax, TaxAct, or TaxSlayer, the software will ask you questions about your overtime pay. You'll need to input the amount yourself. The software can't pull it automatically because it's not on your W-2. So when it asks, did you have overtime pay in 2025? You say yes. Then it asks, how much overtime premium did you earn? You input the number you calculated from your pay stub. And if you use a tax professional, when you bring your documents to your CPA or tax preparer, bring your W-2, your final pay stub showing overtime breakdown, and a note that says you want to claim the overtime deduction. Don't assume they'll remember. Don't assume they'll ask. Just tell them. Here's a common mistake. People think they can deduct the entire overtime pay. That's wrong. It's only the premium portion, the extra half-time or double time. If you try to deduct the full amount, the IRS is going to catch it and you'll get a notice. So do the math right. Use your actual pay stub numbers and don't guess. Don't round up to a bigger deduction. The IRS has your W-2. They know your total income. If your deduction doesn't make sense, they'll flag it. And let me give you some real-world examples of what this looks like for skilled trade workers. Example 1, an HVAC tech. Annual salary, $75,000. Overtime premium earned, $4,500. Filing status, single. Income, well under the $150,000 threshold. The deduction, full $4,500. The tax benefit, at 22% tax bracket, that's about $1,000 saved in taxes. How about a union electrician? Let's say his annual salary is $90,000. Overtime premium earned, $7,000 from lots of commercial project overtime. His filing status, married, filing jointly. Combined household income, $160,000. Deduction, full $7,000. And his tax benefit, at a 24% bracket, that's about $1,680 saved. Here's the point, guys. For most trade workers who work regular overtime, you're looking at $1,000 to $3,000 in tax savings. That's real money. That's a truck payment. That's a vacation. That's money in your retirement account. but you only get it if you claim it, and you can only claim it if you have the right documentation. All right, here's exactly what you should do. Step 1, get your final 2025 pay stub. Don't wait until tax time, get it now. Most companies have online payroll portals where you can download it yourself. If not, ask your payroll department for a year-end summary showing overtime hours and premium pay. Step 2, calculate your overtime premium, not your total overtime pay, just the premium portion. If you made time and a half, it's that extra half. If you made double time, it's that extra full amount. Do the math now so you're ready. And step 3, save it with your tax documents. Put your final pay stub with your W-2, your 1099, and all your other tax docs. And when you go to file, you'll have everything you need in one place. Step 4, file your taxes and claim the deduction. Whether you use software or a tax professional, make sure you specifically claim the overtime deduction on Schedule 1A. Don't skip it, don't forget it, it's not automatic. And step 5, keep records. The IRS could ask you to prove your overtime premium calculation. Keep your pay stubs for at least 3 years. This is only complicated for 2025. Like I said before, next year it'll be easier because your W-2 will have it on it. But this year, you have to do the legwork. And if you do, you'll save some real cash this year, guys. Don't leave money on the table because you didn't know or don't have the right documentation. Guys, if you got some value from this video, subscribe to JB Charles TV, hit that like button, share it with your friends for more real information that affects your paycheck and mind-blowing, high-paying, skilled trades videos every week. Drop a comment. Did you work overtime in 2025? Are you going to claim this deduction? Let me know. I answer all comments. Thanks for checking out the video, guys.